All right, looks like we're diving into Brigade Enterprises Ltd's Q2 FY25 results today.
Hmm.
You sent over their official stock exchange filings and investor presentation,
Yep.
all reviewed by auditors.
Gotta make sure those numbers are legit.
Well, you know me, always got to have those verified numbers. But honestly, one thing just jumps out right away.
Oh,
Zero debt in their residential segment.
really?
It's practically unheard of, especially for a big player like Brigade.
Okay, so break it down for me. Why is that such a big deal in the real estate world?
Well, think about it. Most developers, they rely heavily on debt to finance those big projects.
Right. Real estate's capital intensive for sure.
Exactly. And all that debt, well, it can tie your hands.
Yeah.
Makes you vulnerable when the market takes a dip.
So Brigade's zero debt in residential, that gives them more flexibility.
Tons. They can move faster, grab opportunities that others might have to pass on because of all that debt weighing them down.
So they're playing with house money, kind of?
In a way, yeah. Gives them a real edge, especially with all these new projects that they're launching. Speaking of which, you mentioned they've got a massive pipeline.
Massive. Something like 12.93 million square feet in the next 4 quarters alone. And just for context, their ongoing projects are around 25 million.
Wow, they're really going for it. Okay, so before we get too deep, for those who might not know them as well,
Sure.
give us the quick rundown. Who is Brigade Enterprises Ltd?
They're one of India's top real estate developers, and their portfolio is seriously diverse. I mean,
Oh,
residential, commercial, hospitality. They've even got a music museum.
a music museum. That's not something you hear every day in real estate.
It's kind of cool, right?
Yeah.
It shows they're thinking outside the box, not just bricks and mortar, but experiences.
I like that.
But yeah, they've also got a solid track record, consistent EBITDA margins, which basically shows they're good at making money from their core business.
So a healthy EBITDA, that's a good sign for investors.
Absolutely. And they've consistently gotten high ratings from those agencies, iCarai and CRISIL, the ones that check their financial health.
Okay, so we've got this major player, diverse portfolio, strong track record, and this whole zero debt thing going on.
Right.
But let's get to the heart of it. Their Q2 FY25 financials, just released on November 13th.
Yeah.
What's the story there?
Well, let's start with consolidated numbers. That means including all their subsidiaries. Their revenue for the first 6 months of FY25 came in at 2,025,157 lakhs.
Okay, and how does that compare to last year, same period?
It's actually a bit lower than last year.
A dip in revenue, not usually what you want to see. Should we be worried?
I wouldn't say worried just yet. Real estate's cyclical, has its ups and downs.
Right.
This dip doesn't necessarily mean they're doing something wrong, especially when you consider their sales numbers. Those were impressive.
True, that 47% jump in sales volume and 68% increase in value, that's hard to ignore.
Exactly.
Okay, so what about profits?
Their profit before tax for the first half of FY25 stands at 27,479 lakhs.
So despite the revenue dip, they're still profitable.
Yep, healthy profits.
They're making money, launching new projects, and managing that debt strategically. Sounds like they're in a pretty good spot.
So far, yeah. Now, their consolidated financials, they break down the performance by segments, right? You've got real estate, hospitality, and leasing.
And I know they're planning that IPO for the hospitality segment soon. That'll shake things up.
For sure.
But for now, let's stick with their core stuff.
Yeah.
Real estate and leasing.
Sounds good. Let's see what those numbers tell us. All right, so we were talking about real estate and leasing, Brigade's core segments. Now, real estate, that's their bread and butter, right?
Yeah, the projects they sell directly, residential and commercial.
Exactly. So for the first 6 months of FY25, that segment brought in 1,037,226 lakhs in revenue.
Okay, a bit lower than last year, but we
Yeah.
talked about that, kind of expected with the market cycles.
Right.
What about their profit margin in that segment, though?
Oh, they're doing well there. Profit of 16,877 lakhs for the first half of FY25.
So still profitable, despite those market fluctuations.
Definitely. Now, leasing, that's been a real star performer for them.
You mentioned that earlier. What makes it so special?
Well, leasing, it provides a steady income stream.
Ah, I see.
They've got office spaces, malls, those kinds of properties, and those bring in rent every month.
So it's like a safety net, kind of balances out those ups and downs in the sales market.
Exactly, and it's working really well for them.
Okay, so tell me more about their leasing performance. What are the numbers like?
Well, in the first 6 months of FY25, their leasing segment, it pulled in 55,627 lakhs in revenue and a profit of 32,194 lakhs.
Wow, that's a serious chunk of their overall profit.
Right.
What's driving that kind of growth in leasing?
Several things, actually. One, they've got great properties in prime locations. They really focus on what they call Grade A
What does
properties.
that mean?
It means top-notch, best of the best, location, amenities, construction quality, everything's top tier.
So they attract high-paying tenants because of that.
Exactly. And they can lock them in for longer leases, which means stable income. Smart. So it's not just about having any office space. It's about creating a premium experience.
You got it. And then the second thing, they've got a bunch of new commercial projects in the pipeline, so even more leasing revenue coming in the future.
So they're not just sitting pretty, they're actively growing that portfolio.
Always moving forward.
Okay, so we've talked about their segments, but let's zoom out a bit. Look at their overall financial picture. You mentioned they're in good shape.
Oh, yeah.
Can you expand on that?
Let's go back to their debt management. Remember, zero debt in residential.
Hard to forget. It's a pretty impressive feat.
It is. But it's not just residential. Their overall debt management is excellent. Their consolidated net debt-to-equity ratio for Q2 FY25, it's only 0.15.
Now, for those of us who aren't finance gurus, break that down. What does that ratio actually tell us?
Sure. Basically, it compares how much a company owes to how much it owns. A low ratio like Brigade's means they have way more equity than debt. It's like having a big financial cushion.
Got it. So it's a sign of stability. Exactly. And in real estate, where things can change quickly, that's super important.
So they're not overextended, they're being cautious.
Right. And their standalone financials, that's just Brigade Enterprises Ltd, not the subsidiaries. Their debt-to-equity ratio is even lower.
Even better.
Yep. Their debt is mostly from investments, and they've got plenty of cash to cover it.
Sounds like they're playing it smart, thinking long-term.
Absolutely. They're not chasing quick wins, they're building for the future.
All right, all this growth and expansion, that takes serious financial juggling. How are they handling your cash flow?
Their cash flow statement for Q2 FY25, it paints a pretty positive picture. They pulled in 19,365 lakhs in collections just this quarter. That's a 35% increase from last year, same quarter.
That's a lot of cash coming in. But it's not just about having it, it's about using it wisely.
Right, you know it. And Brigade, they've been strategic, investing in new projects, paying down debt, and keeping a healthy cash reserve just in case.
But it's a balancing act for sure.
It is. And their strong cash flow, it gives them that stability to handle market swings and grab those growth opportunities.
Right, it all ties together. Their financial discipline, the debt management, how they use their cash, it all helps them grow.
Exactly. And that brings us to another important piece, their ESG initiatives.
Yes, I was reading about those. They're really taking sustainability seriously, not just talking about it.
It's becoming huge in real estate, and Brigade, they seem to be leading the way.
They're building their first net zero residential project, going for LEED certifications, incorporating social impact into their developments. It's impressive. Why do you think they're putting so much emphasis on ESG?
Well, a few reasons. Investors, they're paying attention to this stuff now.
Yeah, it's not just about the bottom line anymore.
Right. Companies with good ESG performance are seen as less risky, more sustainable for the long haul. So it makes good business sense.
But I get the feeling it's more than that for Brigade.
I think you're right. It fits with their whole philosophy, creating thriving communities, not just buildings. They know their projects have a big impact on the environment, on the people living there.
And it's not just altruism. It adds value for everyone involved.
Right. Better quality of life for residents, attracting tenants who care about sustainability, contributing to the community.
It's a win-win all around. So we've covered a lot, their financials, their strategy, their commitment to ESG. But the story doesn't end there.
Nope.
We got to talk about what's next, their future plans, all that land they have.
Ah, yes, the massive land bank. This is where things get really exciting, where we can see where Brigade is headed.
All right, let's dig into that. Okay, that land bank,
Right.
480 acres across major cities.
It's huge.
What are they planning to do with all that land?
Well, they've actually got it all mapped out. They've divided it based on what they're going to build. 361 acres for residential, 53 for commercial leasing, and 66 for mixed-use developments.
So they're thinking about the mix, not putting all their eggs in one basket.
Right, got to cater to different needs, different parts of the market.
You know, I was looking at their investor presentation, and the pictures of those upcoming projects, they're really impressive, like little cities.
Yeah, those integrated enclaves, that's the trend now.
It's like they're building entire neighborhoods, not just buildings.
Exactly. You
Yeah.
can live, work, shop, everything right there. Imagine going to the office, the grocery store, even the doctor, all within walking distance.
That's convenient. And they're sticking with that grade A philosophy for these new developments too, right?
Oh yeah, top quality all the way. They're even aiming for LED certifications for those commercial projects, which is a big deal.
Shows they're serious about sustainability.
Definitely. Good for the environment, good for attracting tenants too.
All right, so let's talk specifics. They've got 12.93 million square feet of launches planned just in the next 4 quarters.
It's a lot.
Any projects that stand out to you?
Well, for residential, they've got a bunch in Bengaluru, Chennai, Hyderabad, Mysuru, all those key cities.
Makes sense. Got to go where the growth is.
Yep. But the one that really caught my eye, it's Brigade Padmini Tech Valley in Chennai.
Oh, yeah, I read about that. It's huge, right?
Massive. Mixed-use development, offices, apartments, a mall, a hotel, the whole shebang.
Like a mini city. It's that whole integrated enclave idea in action.
Exactly. Creating a real sense of community, not just a place to live and work.
And they're not just focusing on the fancy stuff. They're incorporating schools, even a hospital.
Right.
They're thinking about the whole picture, the social impact, too.
It's impressive. And all those green spaces, the energy-efficient designs, it all shows their commitment to ESG, to building for the future.
So we've looked at their numbers, their strategy, their vision. They're a major player in the Indian real estate market, that's for sure.
Definitely.
What's the key takeaway for you?
Brigade Enterprises Ltd, they're not just riding the wave, they're shaping the future of India. They've got the financial smarts, the strategy, and the commitment to make a difference.
It's great to see a company that can be successful and responsible at the same time.
And those future developments, those really show their vision, building spaces where people can truly thrive.
So to our listener, Brigade Enterprises Ltd, keep an eye on them. Whether you're an investor, a homeowner, or just interested in seeing how India is growing, they're a company to watch.
I agree.
And hey, maybe we'll all run into each other at that music museum someday.
Huh! That would be something. Thanks for joining us for this deep dive into Brigade Enterprises Ltd.
Until next time, stay curious.